Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is March 22nd. We are going to jump back into the banking sector. A lot of turmoil at the end of the day. The Fed did raise rates again. I figured they would. I think as long as inflation remains high, they're going to continue to raise rates, and it is going to impact the markets whenever it happens. But that presents buying opportunities, and with the banking issues we are having, the bank sector is a sector I think is offering some opportunities. So let's take a look at a request here. Fifth Third Bank was requested by one of the subscribers last week whenever we started having banking issues, and I just finally got it into the rotation. Big drop today, so let's take a look at them. Fifth Third Bank, obviously they're a bank in the banking sector, so they do banking things, right? You borrow, get loans, investment planning for personal and business, commercial, wealth management. So it's your typical bank. They have them here in Michigan where I'm at. I think it's more of a regional bank here. Let me know down in the comment section below if it is in your area. And if you want to know more about them, check them out, www.53.com. That is their homepage. Now let's jump over to the important information. The reason we are taking a look at them today, down 5.44%, which typically I would say is a huge drop, but in the banking sector the last couple of weeks, this is just par for the course. Up one day, down the next, and actually you can see here in the after hours up, they're up 2.63% as of the recording of this video around 5 p.m. We are talking about Fifth Third Bank, ticker FITB, out of the financial sector. Again, down 5.44% on the day, closed out the day at $25.90. 52-week range as low as $22.11, as high as $47.11. So they are pushing close to that 52-week low. Average volume 8.5 million. Today's was 10.4, and you can see it was a pretty steady sell-off throughout the day. Market cap of 17.639 billion. A beta of 1.24. I don't think you'll be finding any banks that are less volatile than the overall market right now. This is no exception. They are more volatile than the overall market. That's what beta means. PE, price to earnings, is $7.40. That's nice. Even though I will show you here below, we don't want to look at price to earnings for banks. Let's jump down to here. If you go into statistics, one of the things you will find is price to book. For banks, you want to look for price to book, and you want something around 1 or below. So currently, their current price to book is 1.12. 2022, it was 1.53. So they are a little more fairly valued than they have been in the past, more fairly valued than they've been in a while. Again, 1 is pretty much what you want to look for. So this is pretty close to the 1 or below, speaks to undervaluation. And earnings per share, $3.50. Next earnings date coming up is April 20th. And they have a forward dividend of $1.32 paid out on the year. They are a quarterly payer, so we'll see that here in a minute, what they pay out per share, or you can divide by 4, do your own math. Very nice dividend yield here, 5.04% currently. And their next dividend date coming up March 30th. So if you bought them now, you would be in line for their next dividend. 1-year target estimate, $39.80, speaks to some potential upside appreciation in the stock price, according to Yahoo Finance, where I pulled this information. I am not affiliated with Yahoo Finance, just one of the sources I like to go to for information. Now, some other information here shown. Again, I've been talking about this, but a quick way to look at this, according to dividend yield theory, you look at their 5-year average or 10-year average, 20-year average. In this case, we're going to look at their 5-year average. Dividend yield is 3.27%. If their current dividend yield, 5.04, or forward, as it shows here, is higher than their 5-year average, it speaks to undervaluation. So these are inversely correlated. You want the current dividend yield or forward dividend yield to be higher than the 5-year average. If it's higher, then that means the stock is potentially undervalued. And just the reverse, if it was under the 5-year average, if this right here or over here was under 3.27, let's say 2.9, then it would mean it would be overvalued. It would speak to overvaluation. So that's a good metric to look at. Just for a quick reference, hey, do I even want to look at this company? Is it potentially undervalued? You can look at the dividend yield theory. Now, and you'll find that same thing under statistics where you'd find price to book. Price to book is right at the top. This would be down towards the bottom. There's other information in there, margins, a lot of information in there, so make sure you're looking at. And another place you want to go is the financials. And that's where you'd find this, where I look at free cash flow. You'll be able to see revenue there, debt, all that information. So you want to go into these other tabs and really do more research on these stocks if you are interested in buying them and understand the company, the fundamentals of the company. What I'm looking for Again, under financials, you'll find free cash flow. There's a tab there, free cash flow. Go to the bottom. These are just snippets. That's not what it's going to look like. There's going to be a lot more information. Are they paying down debt? A couple of things I like to look at though, so I thought I'd highlight them. Free cash flow. You want growing free cash flow because that's what the dividends are paid out of, that free cash flow, and you want growing dividends over time. So you want that growing free cash flow to match the growing dividends. So 2019, 1.5 billion here. 13. See that this when it jumps way down like that, that's concerning. So we had an issue here in 2020, back on track, it looks like in 2021, and then a big jump up in 2022. So not sure what exactly it is, and this is to date. Maybe a lot of these other smaller regional banks, people pulled their money out and dumped over here recently into Fifth Third. I know Bank of America had a bunch of deposits over the last couple weeks because of what's going on with banking. So again, want to look more into this. But overall, from 2019 to 2022, you are seeing growing free cash flow. So that's a positive. Dividend yield theory says it's potentially undervalued, so that's a positive. Next up, we will jump over to stockanalysis.com. I always recommend more than one source of information so that you can make sure you back check your information, that the information you are getting is accurate. They've had 29 stock analysts take a look at this. They call it a consensus buy. They have a low estimate of $36.36, currently at $25.90. It is lower than their lowest estimate. So if it came back up to their lowest estimate, that would be a 40.39% increase in the stock price. If it happened to hit their high, or their average, of $40.95, that would be a 58.11% increase. And their high estimate of $49.35 would speak to some 90.54 potential appreciation in the stock price, at least according to stockanalysis.com. Excuse me. I'm not affiliated with stockanalysis.com either. And another one I like to look at here, if you go into statistics, you'll find, scroll down, you'll find, look at margins, all that information is available there. But one I like to look at is ROE, return on equity, and ROIC. Although ROIC for banks is kind of misleading a little bit. Return on equity is double digits, 12.70. Return on invested capital is 1.4. I usually like double digits, but for a lot of banks, you want to look at this compared to their competitors. I looked at Bank of America, for example. Theirs is right around 1. So banks don't typically seem to have a high ROIC here. Okay? But nice return on equity, 12.7%, at least according to stockanalysis.com. And then lastly, we will look at their dividend. Again, we like to look at their quarterly payer. They pay out 33 cents per share. They had a recent dividend increase here from June 29th, they were paying out 30 cents. Then in September of last year, they raised it 33 cents. So that might give you an idea of when they raise it again. If they do, it looks like they have a very low current payout is 33 cents per share. All right. And their current payout ratio, 37.3%. So very low, very nice to see that. So they have a lot of runway to increase their dividend payouts over time, and very nice dividend growth. Double digits, 10.53% dividend growth. So very nice. So overall, Fifth Third Bank looks like an interesting one. Again, I would do more research, especially with everything that's going on in the banking sector. But whenever there is red in the street, blood in the streets, it is time to buy assets. I think the real saying says if there's blood in the streets, it's time to buy real estate. But I just throw in assets. Call it real estate, you call it stocks, whatever you, gold, silver, whatever it is. It's time to buy. Whenever everyone else is running for the hills, you want to be buying, because that's whenever you find the greatest deals, right? It's a market of stocks. You're going in to buy stocks in the market. It is a stock market, right? That's what they're selling. If you go into any other market, a grocery store, a Nike shoe store, any Foot Locker, pick a store that you like, to Nordstrom's, J.C. Penney's. Are there even J.C. Penney's anymore? Any store that Home Depot. Whenever you see a sale, you don't run out the door, right? But whenever people see red in the market, they start getting freaked out and they want to sell. They want to sell. As long as the fundamentals of the company that you purchased are the same, nothing's changed, then it doesn't matter if it's red. It doesn't matter if the stock price is going down. Only if the fundamentals, the company has changed, free cash flow is out of whack, their price to earnings has gone out of whack, maybe they had a big debt they were trying to pay off, or they get hit with a lawsuit. You want to look for those things. But overall, if there's red in the market, that is the time to buy. It raises your yield. It increases your potential future returns. It lowers your cost basis, so your money buys more, right? These are all positive things that you want to be looking for. I know everyone wants to see that green and think, all right, it's time to buy, it's green. No, you've already missed out on the run up, right? You're in while it's going up, which is fine. You can still make money, but there's a delta there from the very bottom to the very top. And I'll always tell people, look, I don't have to hit the very bottom and I don't have to hit the very top, but give me within 20% of the bottom, I want to buy, and within 20% of the top, I'm fine selling. I'll be fine living in that 20 to 80% range of profit, right? So that's my rant. I'm going to get off my soapbox. We'll wrap this one up. That is Fifth Third Bank. I think it looks interesting right now. There may be better opportunities. I'm not telling you to buy, hold, or sell here. I'm just telling you, based on the fundamentals, Fifth Third Bank looks interesting, might be worth a deeper dive as a potential place to put some money. High yielder, fast growing, dividend growth, low payout. Looks like it's got free cash flow. Price to book pretty close to 1. So all the metrics there line up pretty well to Fifth Third Bank. But again, do your own research. Let me know what you think about it down in the comments below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. It really does help out a small YouTube channel like me with the YouTube algorithms. And the more you comment, like, share the videos, that helps out as well. So do all those things. Hit the notification bell so you're notified whenever we put out any new content. I do personally read and respond to the comments on the day I post a video. So drop your opinions, comments, questions, suggestions for future topics down below. If there's some stocks you want me to cover, go like this one was a recommendation. I'll try to cover those as well. And with that, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest in any amount you're uncomfortable losing. Always do your own research, invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.